FM, and you too. Me too. It's 8:40 here now, 20 before 9. Time to check in on money and see what Wall Street's doing to you and for you today. So far, looking at the futures, it's more to you than for you this morning, and that's a little bit of a turn from yesterday. Let's see if we can't quantify it all. Downtown to Statler Financial Services' very own Phillip Statler. Phillip, good morning. How are you today?
Hey, good morning, Dave. Doing well today. It is, Tuesday, the last week of April, and that's just hard to believe that we're going to finish up the first month of this quarter, and earnings are starting to flow in now.
Yeah, it's getting into the traffic jam segment of earnings season, setting the table before we got some really interesting news that dovetails off of something you and I were talking about. Yesterday we had a little bit more green than we had red. The Dow managed to gain 66.5. The S&P was close to flat, up 3.5. NASDAQ only lost $35, so it really wasn't a terribly bad day on Wall Street, but then all of a sudden, something we alluded to the other day about regional banks kind of taking a bath. First Republic reported, and good heavens to Betsy, did they have a run on their deposit accounts in the first quarter, right?
Well, and we had heard a lot about the issues that First Republic was having during the first quarter. I mean, they were, along with the banks out west, they were one of the banks that was getting hit pretty heavy. They actually lost 40% of their deposits during that quarter, and that's a significant amount of money.
That would be the understatement of the century. When you lose 40% of your deposits in one quarter, that's a catastrophic loss of deposits. And you add that together with the fact that every bank is having a little bit of an artistic difficulty keeping things matched up and following the interest rate juggling as far as the federal bonds they all use for their base investments. It evidently cost them a bit. What did the report come out with anything good news at all? Are they in deep trouble, or was it just a crappy quarter?
I've not really even seen anything in terms of their actual numbers on my tip sheet. It just talks about how bad the loss of deposits were from that standpoint, but they've said they've stabilized that. They dropped 22% in trading early this morning, and year to date this year they're down 86%. So and then to add a little bit more heaping coals on top, one of the firms, Janney, actually downgraded them to sell from neutral. So that's not helping them any either this morning.
I'd imagine not a bit. Wasn't First Republic the bank that the big brokerage firms and banks all kind of came to the rescue and opened up savings accounts in just to float them up?
I'm not sure it was. It may have been, but they're based out of San Francisco, and I was thinking the bank that they came to the rescue was based out of New York.
Yeah, honest to gosh, I don't remember, but I do remember one of the super regionals that we were talking about that kind of got into iffy conditions during that Silicon Valley run. That a bunch of the big name banks like Chase and Goldman Sachs and whoever else just basically opened up passbook savings accounts with a whole gob of money in order to keep them liquid. But I would not want to be in the executive suite of a super regional bank right now, because gobs of money going out like that, it's got to make it even harder to stay liquid, doesn't it?
It really does. It's one of those cases where the super regionals, the big guys, they're too big to fail. They don't have to really, they have to worry, but the government's going to take care of them no matter what happens, probably. And then the super regionals, they're kind of in that section that's like, they've had to go out and make a little bit more in the way of risky bets, right? To make sure they're getting the returns they need versus the regionals. And then you got the locals. And so, there's kind of this stair step thing. And usually your local banks are the most conservative banks around.
Yeah, I was going to say it's the big ones are too big to fail. The small local banks generally are watching their P's and Q's because they know their customers personally and have a pretty good idea where things are going. In the middle, those big super regionals, they're not having a good rush on it. Sometimes you can be on the wrong side of a sandwich, and being on the inside of the sandwich right now is not a really good place to be in the banking business at the moment. One of the things that we're going to get a little bit later on, we're going to get some housing information coming in. I found an interesting tidbit while I was going through my tip sheets. When you go through a look at how real estate is doing, if you're a real estate investor, it might not be a great place to be at the moment. Report out this morning, 1 out of every 7 homes sold by an investor in March went for less than what the investor bought the property for. That's according to the realty company Redfin. February was down 14.5%, but that was the highest since 2016. That's starting to sound like echoes of 2009 when everybody was upside down in real estate. If you're a flipper, this is not a good time to be in business, is it?
No, it's not. It's at least, I mean, maybe in the state of Florida, you can still come out okay if you find a really good deal. But I mean, I think outside of a few very key real estate states, flipping may be a little bit of an issue right now.
Yeah, I think we'd call it risky investment, right up there with federal bonds these days. Calendar for the day, where all of our major reports come out later on this morning. If folks haven't figured out why we aren't quoting chapter and verse, but a bunch of numbers, we're going to get a housing price index number later on today. We're going to get the Case-Shiller home price index and a bunch of other reports, but they all don't come out until about 10 this morning, so I'll have something to summarize tomorrow. But right now we're kind of trading based upon the companies that are out there on the exchange. And with First Republic kind of setting the pace, somebody's got to have some good news. How about UPS? What do you think?
UPS, you would think maybe they did, but coming off of the holiday season, not so good. They missed expectations, Dave. But not by a lot. I mean, they came in missed by a penny at $2.20 a share. Revenue was a little short of expectations as well. And so they're getting hit this morning, down 5% before we get started. So they're probably right now, other than First Republic, taking the biggest hit this morning as we look at different companies. If you want something with some good news, really good news, you have to turn to General Motors. General Motors, man, they really had a good quarter. I mean, their gross revenue beat by $1 billion, more than expected. Their earnings came in at $2.21 a share. They were only expected to make $1.73. And later today, they're actually expected to announce a joint venture with Samsung to build a battery manufacturing plant here in the United States. And so with all that said, General Motors is up a little over 2.5% this morning.
Hearing that from one of the car companies is really they didn't break out their electric vehicles, did they, in that report?
They did not break it out. I did see, though, in a different headline that they are bringing out some electric super truck.
Really?
Yeah.
You know, around here we've got kind of an undercurrent to electric vehicles, and you mentioned it, and about half the people you talk to in a bar start threatening to throw their beer at you. But I know that Florida is one of the 3 or 4 largest electric vehicle markets in the world. We're doing okay down here on selling the darn things. But I still keep getting the feeling that the car companies have basically made a decision, you know, this is what we're going to make and you are going to like it. I mean,
it's kind of like the Federal Reserve, right? They're going to beat us over the head until we buy them.
Yeah, eventually we're not going to have a choice, which is going to make a lot of us really unhappy with the options. Other reports we got this morning.
So we got a couple other ones. We've got 3M. They're the Post-it guys that they came in and beat earnings as well. They came in about 40 cents, almost 40 cents better than expected on earnings at $1.97. They are going to cut some jobs, 6,000 positions globally across the board. They haven't really laid out what that looks like country by country. But that's where they're at, and they are actually up 1.4% this morning. And then, if you got to get a little lunch, you got McDonald's, right? So McDonald's, they beat expectations as well by about 30 cents a share, came in at $2.63. Revenue was a little bit better than expected. and they are up this morning 1.3% as well. Let's talk about, we had some airlines that have reported. JetBlue reported. Now they didn't have a really good quarter. They lost money. They lost 34 cents a share. That was 4 cents better than expected. But they're really getting a big bump this morning because they came out and said that their forecast is for a solid profit in the second quarter. And so they're riding that up pretty well, up 2.2% this morning. Now, I will say they're a cheap stock. Right now, they're trading at $6.97 a share.
But that's kind of seconding Delta's emotion of saying that advanced bookings for the next quarter don't look half bad at all, even in the face of a possible recession.
Exactly. And then the last one I have for you, Dave, is PepsiCo. We had Coke, I think yesterday, and they did very well. Kind of the same issue here with PepsiCo. They beat on top and bottom line for the quarter, and so they're trading up almost 1.8% this morning.
Well, if nothing else works, by gosh, drink soda pop.
Actually, you know what, Dave? They'll actually open up. I'm sorry about that. They'll actually open up at a new 52-week high right now.
Cool. Good to see a sundry company. I make fun of them, but when you take fast food and soda pop in this world, that's a sundry these days. So it's kind of a good bellwether. Resetting the table, it was kind of a mixed bag yesterday. Blue chips were up a little bit. The more adventurous stocks were off. I'm not seeing a mixed bag this morning. I got a lot of red showing on my futures. How are we doing 45 minutes early?
Yeah, the only green I see right now is the VIX. We've got the Dow down 0.25 point. We've got the S&P 500 down almost 0.5 point. The NASDAQ 100 as well down almost 0.5 point. Russell 2000 down 0.8%. So everything I would say is solid red right now. Even on the other side, silver taking a bath this morning, down 1.4%, still above 25 at 25.15 an ounce. Gold's the only thing that's getting a slight tick up, almost 0.2%, back over $2,000 to $2,003 an ounce right now. Crude oil is down. I think it's probably in the neighborhood it was yesterday, Dave, down 0.8 to $78.14 a barrel right now.
Well, I'll establish that as a trading range and be happy. Looking overseas, the Asian Rim market had a couple of BABs going on. The Taiwan and the Shanghai mainland China exchanges were down markedly, and the Hong Kong one down was almost a full 2% down at the close this morning. European markets, let me see here, still a little bit red, but nowhere near what the Asian Rim was at the halfway point in their trading day. If you ever want to retire, knowing what you got is vitally important, and knowing what you'll have is even more important. That takes some planning. How do I get a hold of you to get that planning done, Phillip?
Then give us a call at 863-382-0037. And you also go to our website at statlerfinancial.com. There's a link to our calendar there and some white papers they can get a hold of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning, on Highlands News Talk 730 and 95.3 FM.
All righty, and we'll be back here tomorrow morning to fill you in as to what's going on early on the markets. Phillip, thank you so much. We'll catch you shortly.
All right, buddy. Have a great day.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your week goes well. And I'll be out for a couple of days. I'll see you back here Monday morning, same time, same place. Until then, have a great week. Bye now.